What's up guys, Zoeb here from oneglancetrader.com, and in this video I'll be sharing with you another trading strategy that you can use in your trading today. Now this strategy is called the 3-bar EMA strategy, which is a trend trading strategy which looks for pullbacks within a trend. Now the first thing I'm going to do is share with you the actual indicators used for this trading strategy. Now again, as with all the trading strategies that I share, the first link in the description will be a zip file that you guys can download, which will include the MT4 template, the indicators, and any instructions of the rules and everything like that. So this text file that I'll be going through shortly. So you guys have everything you have to replicate this trading strategy. And what I'll also do is include the link of this video inside that notepad file, so you can refer back to it as part of this training video. So this strategy uses two indicators. The first one is an EMA, and the second one is the MACD. Now the EMA and MACD are standard indicators within the MT4 platform. However, these are some custom indicators which are found online that have been tweaked slightly to give us a better visual representation of what we're looking for. So the first one is the EMA. Now there are 3 EMAs on this chart, and they are the 50, 100 and 200. And then you've got a standard MACD indicator as well. So if I just show you what they look like, again, you don't need to go into these settings because the template will all be pre-built in this preset. So you have got the exact settings and modifications that you're seeing on the chart now. So the MA in color indicator, again, you've got the period, and then you've got the type. So one is EMA, two will be SMA, and then you got MA, and then you got LWA. And again, you can play around with these settings, but in my personal view, this is what I find that works the best. And then you got the MACD true, which is basically the standard MACD indicator that you would normally see on other trading platforms. And the one thing is, the reason why you might be seeing that the MAs or EMAs are different colors, and effectively what it does, it takes the slope of the MA. So if the MA is pointing, or EMA rather, is pointing upwards, it will be green. If it is pointing down, it will be red. And if it's flat, i.e. ranging, it will be blue. So this gives us a quick visual representation of where price is, and are we in a trend, are we in a downtrend, uptrend, or are we ranging. The reason why I like to use 3 EMAs, because as you'll see as part of the rules, the way that they're stacked, and if they're pointing in the if they're stacked and pointing in the same direction, i.e. the same color, it gives a very quick representation of whether we are in a bull market, a bear market, or a ranging market. And the MACD is primarily used as indications for when a potential pullback is occurring. So those are the two indicators that are used, and again, everything's in the first link of the description of how to use it and all that good stuff. So in terms of the currency pairs and the time frames, again, for me personally, trend trading, works on any currency pairs. I like to develop and share strategies that are, impromptu, for more of a better term, can be used in any time, anywhere, any place. So any currency pairs, any time frames. But the only caveat I would say around time frames is the longer the time frame, generally the more reliable the signals are. But again, that's not to say that it doesn't work on any time frame. And just to let you know, I'll be using the Euro USD 30-minute chart, and again, we're very close to recent price action, which is what I like to always use to show that these strategies are relevant in today's market. So again, we'll be focusing on this area now, and as you can clearly see, we are in a upward trend, so we'll be focusing on the long rules. But again, the short rules are just the opposite of the long rules, and again, you can use that and look back on previous charts, and then back test this system yourself. So the first thing we need to do is identify the trend that we're in. Are we in a long trend or are we in a downtrend? And the way to do that, it might help. And don't say that. And where the sorry, just lost my train of thought there. I just think of the colors, but you don't really need to worry about that too much at this stage. So what we're looking for is the order from top to bottom is that the 50s on the top, the hundreds in the middle, and the 200 is at the bottom. So you can see from this area over here, pretty much that you've got the 50, the 100, and the 200 in that order. So when they're in that order, and again, they're all green as well, which is great to see, that we are starting in a phase of an uptrend. So that's the first thing we're looking for to determine direction. The next thing we're looking at is looking for when the MACD is above the zero line. Generally, by little areas over here and over here, is that if these three are in that particular order, you're going to be above the zero line, as you can see there. So what we're looking for is when these two situations are true, we're looking for the MACD to do a downward crossover. Yeah. So if we take here, for example, forget the cross chair out, you can see that three EMAs are above. MACD is above the zero line. The zero line is over here. And then we have a crossover here around this point here. So what I'm going to do is put that in there. So then that would be there. So at the moment here, we have the first three criteria selected. MAs in the right order, EMAs in the right order, MACD above the zero line, and a downward crossover over here. So at the moment we're all good. The fourth point is that the 200 EMA is green. We can see at the time there the 200 EMA is green, so that's there. Now this is where this area where this kind of signal falls over, is that price has touched or closed below any EMA. Now as you can see here, the EMA is at the time of this cross is that price is not near the EMA. And why is that important? So the reason why that is important is that the we're looking for potential areas of pullbacks, and pullbacks tend to occur around well, what we're looking for, not to say it does, but we're looking for pullbacks around the EMAs. And the reason why we're trying to do that is because EMAs become natural support and resistance levels, and therefore we want to try to get in at the best possible price. So we'll see that in a second why this step is very, very important. So it falls down there. I'm not going to go into the next levels because prices have fallen down there. And the reason why um, is that because we're here, this it still pulls back further into this area here before it starts to before it starts to take off. So that's why that situation there does not become a great trade, because we still got, it's not to say price can't shoot up straight away, but again it still has another 10 pips really of drawdown. Yeah, you did get you were in profit for a little bit as well. So depending on where you set uh, your stop and your take profit, you might have made some profit there. But again, it does pull back quite a bit. So as we continue on, um, we are still in this situation here, and then we get another situation here where, as you can see, would be that. that one there and zoom in a little bit, because then we can see what's going on here. So we can see here that price again is in the right order. We've got a pullback, a signal at this bar over here. But again, you see that price is it's nearly there. It's nearly at the pullback, but not yet. So again, another thing of where this is not a correct signal. So I just delete that one there. So as we go across, we get stuff here. Even though that this is a nice pullback trade across the trend, we're going to ignore that one. Then our next signal is over here. So if we go back and zoom out slightly, we got the three EMAs in order. Go back over here. Three EMAs in order. MACD above the zero line, which it is. MACD downward cross, which as you can see, it crosses over the signal line over here. And again, price touch cross below any of the EMAs. Again, as you can see here, we are still a little further away from touching any of the EMAs. Again, this wouldn't be a valid signal, even though you can see the future and it gives you a nice trend here. But this is not what we're looking for. We're trying to be stringent with the rules. So let's follow on. So now we get to a point of where we do have a situation of where it does. So if we go through this example here, all three EMAs in order. That's the first step. The second step is the MACD is above the zero line. Yes, it is above the zero line. MACD downward cross. As you can see where I've drawn the line, the MACD has crossed over. The 200 EMA is green. The 200 EMA is green. And then the next thing here is price has touched close below the EMA. As you can see here, that red bar has closed below the 50 EMA. So that's great. That's what we're looking for. No obvious signs of bearish divergence. So bearish divergence is where the price is making higher highs and the indicator, in this case the MACD, is making lower lows. Again, I'll link a video in the top right corner for you guys to learn about divergence. But just to show you here in this example, you pretty much got prices making flat to slight higher highs, and the indicator, if you take the 2 points here, is making lower lows. Now, for me, I would want to see this area up here somewhere for it to be kind of a really big divergence. So therefore, price is conflicting with the MACD. Therefore, price in theory should drop. However, this isn't obvious to me. And again, that will come over time. But again, check out that video, and that video will give you some clearer examples. So in my view, there is no obvious bearish divergence. So therefore, you would be opening the trade on the next candle, which would be this candle here. So if I draw the line there, that is where we would be opening the trade. And again, we'll go through stop loss and take profit targets in a second for that. But I just want to go through all the entry signals very quickly. So again, this would be a valid trade. Then we continue across. We get no crossover there, and the next cross is over here at this white line. Again, in my opinion, is a valid trade. So EMAs in order: 50, 100, 200. MACD above the zero line. MACD downward cross. EMA 200 green. Price touched or below, and as you can see here, you might not be able to see it very clearly over here, but I've checked it that this red bar is the one that causes the downward crossover, does touch the 50 EMA. It doesn't close below as this one did. I would prefer a close below, but it does touch, meaning that we are the pullback is significant enough that um, that we are looking at a potential area of a reversal in the direction of the main trend. And then again, you would open on the next candle. So if I do that one there, again, it gives you two signals very quickly, which is about there. So they're both roughly around the same area. So we've got an option here. So the first trade is in a slight profit, maybe break even when you take spread into account. But again, it gives us two signals over there. So let's carry on going. You've got another one over here as a thing there. So if I quickly go through this one, you got the EMAs in the right order. Prices above the zero line, way above the zero line. In this case, you've got a downward cross below the signal line. Again, look where price is in relation to any of the EMA. So this is a very strong trend. And what I don't like this gap. This is 40 points away from the EMA. So therefore, even though it does go in the direction of the trend, it's possible that they still had some more momentum, like in this example, to pull back even further before going back up in the direction if that's what it wanted to do. So in my view, again, it wouldn't be a trade. Now the last one is where I want to show an example of bearish divergence where it hits all the rules, but in my opinion, it's a very significant, obvious bearish divergence. So that's this play over here. So if we go back to the rules, EMA is all in the right order, MACD clearly above the zero line. There's a downward cross, as you can see here. Price has touched or closed below the EMAs, and then no obvious bearish divergence. So again, I'll strongly check out the video, but I will show you that price is making, it's not the best color, but it's making higher highs, this peak to this peak. And the MACD is making lower lows, as you can see there. So in my view, this is obvious, a lot more obvious than the previous one that we had over here, and therefore price can potentially start a reversal. In this case, as you can see, it didn't, and it's starting to reverse back and potentially looking at a double top here, and potentially will go back down. But either way, for me, it was an obvious. It's a divergence. It's not something that I want to do. Another thing as well is this trend has been going. It's quite a long trend, and again, the longer you try to get into a trend, the more exhaustive that the trend can possibly be. So again, in my opinion, using the rules, it's not something that I would get involved in. Now, and again, that's it. So in that all that long-term trend from the 21st to the 28th of February, we found two potential trading opportunities of where we would enter in the trade. Now, the next question is where would you place your stop loss looking at these two situations over here? There are kind of two main key areas that I would potentially use. The first one is below the 200 EMA. So again, that would be over here. Would be my potential area of a stop loss. The second one, which you guys know I like to use, and again, I'll link the video so you guys can have a look at that, is the round numbers indicator, which is basically whole numbers as natural support and resistance. So you can see here the 1.08500 level is over here, which is pretty much near bang on the EMA. So if price ever got to this level, you've got the EMA and a natural resistance line. There's a strong level of support there. So again, it's pretty much the same, but that would be something again I would look for. And those are the two areas I would look for in this scenario to be using for stop losses. So that's how I place my stop loss. And now the take profit target. For me personally, I like to use reward to risk. For me, it is all about a minimum of 2 to 1 on your money. So what I would do here is I would, let's say I was using the EMA, I would have a 25 points start, and then I'll be looking for a 50-point profit target. So again, what you can do, there's so many different variations, and they'll be doing more videos on take profit targets or when to move stop to break even, taking more off the table, scaling in, scaling out. There's so many different ways to kind of do this, but I know that traders that have emailed me always struggle more with the kind of entry signals. So that is what I'm focusing on this video. So again, my personal view would be is just to do a 2 to 1 straight, and again you can move your stop loss to break even when you get to 1 to 1 to make it a free trade. There's many different ways you can do it. The other way is using fib extensions, which I'm not going to go into in this video because I want to keep it quite basic for everyone. And then the last one is just to trail the stop. So what you can do is that you can just trail the 200 or even the 100. So if we look at this now, you'll still be in this trade. You entered in here. If you were trailing, if I just take the first trade, you'll be 60 points up, and if you're doing this one, you probably would have got stopped out over here. You would have stopped out at 86. So again, trailing is also another way, especially for trend trading. Trading is a really good way of you know, using it as an exit strategy. Or what people could do is you could go for a 1 to 1. You could open two trades. One is a 1 to 1 and one with 1 to 1 reward to risk, and another one with a trailing of an EMA. So you just let that one run. So again, there's many different ways you can do the exit. But for now, if you're new and if you're a beginner, I strongly recommend that you just put your stop loss in at or slightly below the 200 EMA, and then set your take profit target at 2 to 1, and then just walk away and set and forget it. So like I said, first link in the description, you'll get the template, you'll get the indicators, and you'll get the rules. And what I'll also do is when this is uploaded, I will provide the YouTube link as well inside this document, so you guys have that, so you can use it as a reference point to this video at any time. So really hope you enjoy that. Please comment, let me know how you get on, and I shall see you guys on the next video.